Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group. Our toll-free number, listen, write it down. Matter of fact, just call right now because we're going to do something we don't normally do. I've got an item, a silver item, and it is going to go quick. So be ready to get on it here. 800-951-0592. The website at allamericangold.com. I'm joined, as always, with my partner, Jason Walker, up there in Colorado. We got gold up 28. We got silver up another 60-plus cents. Matter of fact, silver 21, almost 21.25. Gold 17.21 in change. Crude oil up again, a big here, another $3 to $4 is now OPEC. They're talking about maybe 2 million barrels in cuts a day. But Jason, we've seen silver break out here, and the silver premiums this morning are at new all-time record highs all across the board. There's no silver anywhere. And I'm just going to say this. Gold, same problem. Everybody be patient for deliveries. Normally we get things out quickly. But we're talking a week to 2 weeks. That is going to be normal shipping times. And Jason, if this rally continues, which I think it will, I expect that those shipping times to take even longer.
Seemed like just a couple of days ago, last week, it was silver spot was 17. So now it's over 21. So, yeah, it's moving pretty fast, Joe.
So right now, Silver Eagles, anywhere you look, you want to roll a Silver Eagles, you're going to pay $39.40. A lot of places even have them over $40 right now. Utility silver, your dimes, your quarters, you're almost at $35 an ounce. Half dollars, $37 an ounce. We have got silver rounds, and again, I'm pitching them now. Do not wait. This is very, very limited. But we have access to them, and so does everybody else in the country. Right now, a roll of rounds, that's 20 silver rounds. These are 1 ounce, $3.95. They're the same thing as a Silver Eagle without it being minted by the U.S. Mint. It doesn't have a dollar value on it, but these are produced by the same company that actually makes the blanks for the U.S. Mint, so you know what you're getting here. 1 ounce silver rounds, they're $28.50. So if you buy a roll, they're $5.70 a roll. If you buy a case, which is 25 rolls, we'll take it down to $28. So a case, 500 ounces, $14,000, or you can buy the roll at $570. But Jason, I mean, you buy a case here, you're almost talking about buying silver. Not almost, you're talking about buying silver for almost $12 an ounce less than a Silver Eagle.
That's correct. And for anybody out there that gets a little confused with the terms, and Joe was describing it well, but a round is exactly a Silver Eagle. It's the exact same thing. We don't sell a lot of these. We don't have availability as much as the Silver Eagles. It's just some private mint that did it instead of the U.S. Mint. And people love the U.S. Mint, and the world trusts that product a lot. That's why the higher premium. But if we can get you silver rounds at a special price like this today, you're getting every coin is exactly the same thing. It just has different pictures on it, Joe.
This price is absolute insanity. Do not wait. Buy it all while you can. If you're a silver buyer and you want to be in silver, this is by far the best way to do it. Because let me tell you right now, you're never going to make up $12 an ounce, right? When between these, this deal is red hot right now. 800-951-0592 U.S. or well, they're made here in the U.S., but these are silver rounds, 21 ounce silver rounds at $5.70 a roll. Buy a case. By the way, 570 roll, that's $28.50. If you buy a case that's 25 rolls or more, by the way, a case, $14,000 right now for a case, then you're looking at $28. And that's not even, you know what's so funny, Jason? That's not even, that's $6.75 over spot. I know that you're like, wow, that's a lot. Now, that's the cheapest over spot I've seen silver of any kind. And now with record high premiums, it's even better.
Yeah, silver spot last week was $18.33. So it's up $3 in 5 business days. So if we have silver going up that quick, premiums going up with it, and you can buy it at this price, there's not a lot to think about, Joe.
Now, this is a no-brainer. This is the deal of probably of the year on silver right now. Silver is just getting started. We've been waiting. Remember, a few weeks ago, we were talking about this bottoming pattern. Then we had that few days there where retested that bottom, kind of double-tested down there at $18. And, Jason, it has just been on a tear ever since.
Yeah, up like what, $25, $30 right now. It just seems to keep pushing upward. And you know, Joe, we kept telling people keep buying. You can still keep buying at this price, but long term, next month, next couple of months, next year, these prices are just going to be gone, Joe. They're not going to exist anymore.
Yep. And when we get cut off, we get cut off. We don't know. This is order as you go type of a thing. 800-951-0592. Patriot Radio News Hour. Joe and Jason, we're coming right back. 800-951-0592. We got 2 lines open, and just like that, we've just been informed our allotment left 75 rolls of these rounds. That's it. Then they're cutting us off. And I knew that. Normally we obviously don't come out and start pitching from the first second of the show. But Jason, we want to get these in people's hands. 1 ounce silver rounds, just like Silver Eagles. They come in a tube. There's 20 coins. They're coins. They've always got pretty cool designs on them. And 3.9 fine silver, just like a Silver Eagle. The big difference is, Jason, you're not paying $40 an ounce. You're paying $28 an ounce. Well, $28.50 if you buy a case, which is 25 rolls. We take it down to $28 an ounce at 800-951-0592. We have let and by the way, this is an offer from the world's largest wholesaler, who normally doesn't even deal in silver rounds, but they were out there. They took advantage of it. But Jason, here, we have let them know if somebody else doesn't take their allotment to please let us know. But right now they have told us they won't allow us to book anymore.
Right, Joe. I mean, yesterday you had $20 liberties at $20.75. The price of gold kept moving. So on the afternoon show, which got less listeners there, but could have bought them for $20.95. And now on looking at the website, we have 20s for $21.15. That is how fast it can move. That's how fast it moves.
And I'm going to tell you right now. $21.15. Gold's now up $34 when that price was back when gold was only up 15. So that it's going to be even higher again tomorrow. Silver continuing to rally here, up almost 70 cents, 21.30. Jason, and again, I expect this to continue. OPEC now, there is news breaking that OPEC is actually considering 2 million barrels a day in oil cuts. We're going to find out the answer tomorrow. Yesterday, the Wall Street Journal said, hey, don't be surprised at 1.5 million. That's well above. I think a lot of people are still hoping it will be $1 million or 1 million barrels a day or less, but I doubt it. I think it's going to be somewhere between 1.5 and 2 million barrels a day. OPEC has made it very, very clear they want oil prices well into the 90s and really preferably above $100 a barrel, Jason.
I wonder if that's what Joe Biden told him when he had his little trip over there. Hey, we need to get this thing
remember
up.
that?
We need to get that price up to $150. Well, you guys better play ball so you can see we are our favorite nation here, Saudi Arabia. That's what it feels like, Joe. That's what it feels. It feels like. Well, there was a meeting there for a specific reason. Because look how fast. Oh, we hope they just cut for 1 million barrels, man. No, there's 2 million. Oh, there's 1.5 million. This is. Where's the?
Last week it started out as 500,000.
Where's the talk?
Then it went to 1 million, then 1.5 million. Now it's 2. It's like an auction.
Where's the talk of? Why don't you guys increase 1 million? Where's that talk? It's funny how they pigeonhole the conversation into a dark place where, well, I hope they only cut at 1 million barrels. It's funny how quickly that language gets changed. Why aren't they standing up and say, you know what? Why don't you increase it 1 million or 2 barrels and alleviate the price here? But that's not where it is, Joe. Look, it's so crazy.
Right? Think about that. Where is that? Yeah, absolutely. By the way, one line open, 800-951-0592. Coal prices. Got to talk about coal. That energy that everyone hates hit a new all-time record high as natural gas is becoming harder and harder to find. Coal being used as a replacement. A lot of places now, Jason, refiring up these old coal plants. Bloomberg saying that coal prices hit $204.95 per ton. That is the highest price going back to 2005 when they started tracking this price. Let's just round it up here, $205 a ton right now on coal. And Jason, why do I get the feeling that as winter drags on here, coal prices are going to go even higher, just like natural gas? By the way, unleaded gas futures up another 6% today. I know here in Arizona we're seeing sky-high gas prices. There's 3 refiners that are down in California leading to that problem. But, Jason, get ready here. We've been talking about it. Gas prices are going to start creeping up here all over the country.
Yeah, energy is an entire market unto itself, kind of like precious metals. It's not just gold. There's silver in there, and there's palladium and platinum. There's other stuff in there. So when it comes to energy, whether it's natural gas, oil, coal, wind power, all of this is energy that the world uses to power itself. And so the downward downsizing of nuclear plants and pumping less oil and shutting down pipelines and things blowing up, all of this is just simply telling the story that it's going to get really, really expensive, Joe. So as soon as you said, well, somebody's going to use more coal in a situation where there's less energy being produced, of course, the price is just going to go up, 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 up. It's just going to make things worse, and everyone's accepted this inflation, Joe, so here comes some more with the energy.
Yeah, and again, they keep talking, Wall Street's living this delusion here. They obviously, it was due for a little bit of a rally. It was up 700 points yesterday. It's up 700 points today. Now, some of it is because oil, gold, silver, right, all those companies are doing better with these higher prices. But a lot of it is because they think the Fed's going to quit. And I'm telling you right now, they have no choice here. Inflation continues to skyrocket, and then remember, Jason and I kept talking about it's all going to be job dependent. If the jobs go, then all of a sudden that soft landing, which is probably already gone, but that hard landing gets a lot harder if the jobs go away. Today we got the JOLTS number. For you guys that don't know, we get this number every month, and this is what they do is they track job openings. They said that job openings fell by 1.1 million jobs. It is the biggest 1-month crash since they've been doing the survey, with the one exception of April of 2020. Remember, Jason, when only what they deemed to be important people could go to work during COVID. Outside of that 1 month, the largest drop in job openings on record.
Yeah, well, I mean, that's what they were aiming for, supposedly, right? You get the inflation down, you got to kill jobs, right? So I guess that's...
Remember, Ray, let's not forget their last meeting. What did Jay Powell actually say? We want to lose jobs. They have this illusion, delusion, really. Hey, we want 1.5 million Americans to get fired, right? We want to lose jobs, not a ton of jobs, just some, right? Jason, it doesn't work that way.
No, it doesn't, Joe. And so, here we are, job killing agenda here because of the inflation that's out of control. And Joe, how many jobs are they going to have to get rid of? Because the inflation doesn't look like it's going away. The Fed's already talking deep into next year inflation themselves. They're talking about it. So between now and let's just say next summer, how many jobs can they get rid of, Joe? It seems like there's a lot of jobs going to be going away here because of these policies.
I'm going to tell you right now, I've been doing this a long time. And I've never, ever, ever heard the head of the Federal Reserve or any Fed governor or anybody really come out and just say, we want people to lose their jobs. That's never happened before. And so it just tells you the reality of what is really going to happen out there. CarMax, right? CarMax, one of the largest car dealers out there. They specialize in used cars. Jason, they reported an absolute disaster, missing earnings expectations by half. They are expected to make about $1.50 a share. They made a little over 70 cents a share, and essentially said higher interest rates is making it harder and harder for people to afford a used car.
Yeah, never mind. The price is also going up. Maybe it'll start going down now when there's lack of buying, but the prices went up, Joe. I mean, the biggest growing asset class in 2021 was used cars. And then that was when the inflation started. Now the inflation's worse. So that's a recipe for disaster if you're in the car sales industry, right? The prices are up, and the interest rates are up, and nobody can afford them. And then, but by the way, they're going to have people that are upside down in their cars now because the car values might drop, and so people are just going to walk away from cars like they walked away from houses in 2008, Joe. So that's another thing they're going to be watching for is the default on car loans, and then there's going to be more supply of cars.
Yeah, and again, all of this is that vicious circle not to be done here. Case-Shiller now saying the last 2 months, and Case-Shiller tracks home prices. When you combine July and August price drops, they say that it's the biggest 2-month decline since Lehman Brothers collapse. So again, drawing some of these parallels, right? What are the signs that we saw before the last big crash? We start looking at the signs that we're seeing now. The big difference there's really only one huge difference between the two, right? We're starting to see stress, right, in financial markets. We're starting to see liquidity issues. We know about what happened with Japan, what happened in the UK, Credit Suisse, their credit default swaps, right? They had to pay higher premiums to get people to lend them money on their debt. That happened yesterday. Now we're talking about housing prices. But, Jason, the big difference is how much inflation we have this time versus last time.
Yes, Joe, exactly. And the inflation is going to continue. And you know what? It's in my mind. You brought up the car thing. What a great example of false scarcity. Remember last year? Oh, there's no cars in the lots, and there's a chip shortage and supply chain issues, and there was no cars to be had. But now suddenly this year, we're getting ready for a car apocalypse where there's going to be piles of cars that can't go anywhere, right? I've seen these lots in California that are these auction lots where they can't even unload the cars on auction. So it's just look at how quick it turns. That's how fast the market will change on something. Yeah,
exactly. And again, that's the thing about the all of these markets. When we talk about these things, we say, "Oh, it's gradual. Well, there's a little slowdown." Well, the price it fell a little bit, right? Well, it fell again, right? And it's slowing down, but it's not horrible. CarMax. The results were not good, but hey, we still made some money. And then, Jason, all of a sudden, it stops completely.
Yeah, all at once. And I remember it was like July and August of last year, where the prices on the cars just started zooming straight upward. I think it was kind of going up the whole year, but it was like just at the end of summer last year, and the prices just went berserk on these cars. And now look, all these people that bought the cars at the back half of 2021 and the beginning of 2022, look at their car price, the value of the car, it just went down. It's hard to believe. I mean, everyone knows you buy a new car, you lose a bunch of value when you drive it off the lot. Everyone knows that. But this is with used cars now and new cars. I mean, if you bought a car with, say, December 2021, Joe, I wonder how much value you've lost and how much value you're going to lose on that car that you're making a payment on.
And these are the things that really make it more difficult. And when people have to make tough choices, remember the thing that we've kind of learned now from the housing market. Hey, if I get too far upside down, I'm better off just giving it back, right? Versus trying to hang on to it. I'm just give it up because I can go and get another one for a lot less. We'll see how it all plays out. The phone lines are open. We still have some rounds left. Call right now, 800-951-0592. 800-951-0592. Patriot Radio News Hour. Joe and Jason here. Gold's up 35, 17.28. Silver's up 66 cents, 21.25. We've got we got allotted 5 cases of silver rounds this morning. We've got about 2 cases left, so about 50 rolls left. $28.50 an ounce. That's for one roll, a roll of 20. They're going to come in a tube. There's going to be 21-ounce coins in that tube. Each one of them is $3.95, exactly like a Silver Eagle. It's 1 ounce of silver per coin. There's 20 of them in a roll. They're $570. That works out to $28.50. Right now, as Silver Eagles, as an example, $39.40. I've seen as high as $42, $43 this morning, but like right now for us, we're at $39.50. But as soon as the show's over, we're going to be $39.70. I got to raise the price because the price just went higher again. By the way, it just went higher again. Silver $21.30. But Jason, this is a huge discount to what you can buy any silver. I've looked everywhere, finding silver for under 30, really finding silver, even utility silver, $34, $35, $37 an ounce. You just can't beat this price right now. If you buy 25 rolls or more, let's just say, hey, give me what you got left. You'll get them at $28 an ounce, Jason. That's $14,000 for 25 rolls at 800-951-0592. And again, silver now breaking out here, and it's such a hugely shorted metal that when you get breakouts, these are the moves that happen. All of a sudden, yesterday silver moved 7, 8, 9%. It's now up almost another 5% again today, and that's very, very typical here. And I think we're going to see silver really finally start showing some strength as we head into winter.
It's interesting because you have the markets going up yesterday and today also, so it's kind of a smokescreen. It's kind of a cover for what's really kind of, it's at some point it happens. The lack of physical market is pulling silver and gold up, and especially silver. It does happen, but it seems like you have to wait around. Sometimes it seems like for months or years, and then finally you see it. The lack of physical silver market or lack of physical gold market is just pulling the paper markets up. It's just bullying its way up.
The last time I saw silver really go, remember, that was when it went all the way back. Remember, it touched $50 an ounce, and Of course, we were, dealing with the housing crash. We were dealing with the financial trouble. And then remember, the bankers had to protect themselves and essentially said, hey, nobody can go long silver right now to try to put the lid on it here. And again, here's the thing that makes it a little different this time. The inventory of silver in vaults, whether it be the COMEX, whether it be London, is significantly lower, Jason, than it was the last time silver started making moves like this.
And just look at the timeline. You had 2008 market crash, and 2011 a record silver and gold price. So 2020 market crash, and people better start looking at that market crash in 2020 with a lot more seriousness. They snapped it back like a rubber band, but it happened. And here we are, 2022 going into 2023, and silver and gold look like they're starting to bubble up here in the same time frame, Joe. This seems like a pattern that exists here.
Right, and why are they bubbling up? Because all of a sudden, we're just every week, it's another wave. It's another problem, right? It started with Japan, right? Japan had problems, and they needed to try to protect the Japanese yen. And then it was the UK. Now Credit Suisse, and they're trying. Well, it's not a Lehman moment. Yeah, it's not a Lehman moment yet. But believe me, if Credit Suisse's credit default swaps are widening out, all the banks' default swaps are widening out. And the worse this thing gets, listen, we're not to winter. The bad part's going to be this winter. That's going to be the bad part. Now you've got the UN coming out saying, hey, can everybody stop raising rates and let's just go to price controls instead? I mean, this is some of the nonsense people are talking about, Jason. And this is because they built the Ponzi scheme, plain and simple.
Yeah, you've got to see past all of the stuff that flashes upon your TV screen and your little smartphone device in your hand, because they're not telling you the truth, because somebody else wants to take that value. Somebody else wants to gain off of the loss of others, Joe. There's a pile of assets. There's only so much of it out there that exists above ground, and people want to take advantage of somebody else who's losing. Every time there's a winner, Joe, there's usually somebody on the other side that's losing, right?
Yeah, there's always somebody on the other side of the trades, and this is what's happening. Think about what was happening in the UK. Where, and again, here's the problem: the debt markets, like Wall Street, the Treasury markets, whatever, commercial-backed real estate, whatever it may be, they've been groomed for 50 years that, hey, we can do these types of trades. So, the UK pension system, they weren't doing anything they hadn't been doing for the last 20 years. Because they believed that what they were doing, they were borrowing money, right, and going long this and short that, and essentially trying to make money off of spread differentials in their own treasury market, something that had been deemed safe. Now, here's the problem: nothing about that is safe, but they've been groomed to believe it was safe because, well, the central bank's not going to let anything bad happen to us. And the realities now, Jason, is they've created so much debt. They made the Ponzi scheme so big that the central banks now are having a very hard time controlling it, because now they're supposed to be taking the punch bowl away.
Well, and they don't look at history. They've shown this play that they're doing now. They've shown it before. It was the 1970s. Paul Volcker, he raised their interest rates dramatically because inflation is a big killer for the Federal Reserve System. They can't have tons of depressionary downward turn. They want inflation. They just don't want deflation, and they don't want hyperinflation. They want inflation, Joe. And when there's too much of it, that becomes the number one goal. They will sacrifice everything else just to preserve their power, Joe.
We got two lines still open, 800-951-0592, Patriot Radio News Hour. We'll be right back. 800-951-0592. And Jason, a former Pentagon advisor, came out and said that the most likely attacker of those gas pipelines in Germany, or well, I guess in the Baltic Sea, was the United States and Great Britain, because they said that, he said that Germany was beginning to waver about supporting the Ukrainians in the war, and were about ready to make a deal with Russia on natural gas for the winter. And he's saying that either the British or the U.S., or probably both in combined, were the ones that perpetrated this act. I mean, it's amazing to think about. I mean, obviously we don't know who was behind it, but we do know, by the way, the guy's named Douglas McGregor is the guy that was claiming this. But it's one of these things where, once again, hey, if we need to put people's lives at risk, they're willing to do it.
Yeah, Joe. Well, there's always an emergency. We know, and how many times we said there should be no shortage of energy. There should be tons of it coming out. It should be cheap. We should have $1 a gallon gas. But that's just not the world that we're allowed to have. They make the decisions and they set the table. So there's going to be, all through this winter, this back and forth about energy and who's loyal to whom in Europe and Russia and China, and all this stuff is going to go on and on and on, because let's face it, Joe, they want us to pay $4 or $5 a gallon gas. It sucks. It shouldn't happen. It shouldn't happen, and we don't have the power in this particular moment in time to stop what's happening. So we have to just protect ourselves the best we can, isolate ourselves from this stuff, Joe.
Yeah, and I say it all the time, be your own central bank. Look at what the central banks are doing. That should be a good indication. Jason, they continued to add gold again in August. Central banks added another 20 metric tons. They actually added more than that, but they were waiting because India hadn't officially made their announcement yet, but they know that India, who's been buying gold all along, was buying again. So my guess is next month we may see a bigger number because of that. But really, when you look at what's been happening on the metal side of things, we're seeing that central banks have been buying gold for years now. I mean, I think this is the 11th straight year, maybe longer than that, but I believe this is the 11th straight year of central banks adding gold. And when you think about the amounts of gold that they're adding, we're talking about 2, 3, 4, sometimes 500 metric tons of gold a year, Jason.
Well, I think that's an indication of what the average person should be doing then, Joe, because if they're going to scoop it up and hold it as a valuable asset, obviously they're not buying it because it's going to go down and be worthless, right, Joe?
Well, and again, you know what they buy it for? Because they know their fiat currency could be worthless. That's the whole point, right? So when you see them adding, and really go right back to the financial crisis, because that's really the parallel. These central banks, because I've been saying it all along, right? They didn't fix what happened in 2008. That did not get fixed. It got papered over, and then really papered over during COVID, right? When you think a lot about, well, why did they spend so much money on COVID? Well, they bailed out pension funds. They bailed out banks. I mean, it was just this massive money printing machine. And the realities are, Jason, they didn't fix it. They know they didn't fix it. And that's why you're seeing all these central banks all over the world buying gold and continuing to buy gold.
That's right, Joe. That's right. I mean, gold is such a great store of wealth that if the currency is going to change, we're going to have that great reset, we're going to have a digital currency in the future. I don't think any of these central banks, you're a part of the cartel, but you also kind of have to protect your little corner of the world. You put it in gold and silver, and you sit there and you wait for the big change. And then after everything resets values, then you can go back into currencies and all these other things. You can sell your gold off. But right now, Joe, it's a big buying frenzy, and these artificially low prices look like they're finally starting to release a little bit. We'll see. We'll see where it goes. But I'll tell you right now, by the next presidential election, 2024 going into 2025, I wouldn't be surprised if everything is minimally doubled in price as far as gold and silver.
Yeah, they're on track to add over 400 metric tons this year. It was, Qatar, which bought another 14.8 metric tons that they didn't count because they haven't officially announced. They actually know what they've bought. And then India, they're waiting there because they've been a huge buyer of gold all year. But essentially, really, banks bought 35 metric tons in the year. So far, over 300 metric tons. They expect that number to be over 400 and possibly 500 metric tons before the end of the year. It's an incredible amount. And like I said, this has been the case year after year after year.
Yeah, Joe, I would say India, as an example, in the next generation, that might be the country that holds the most gold of any country in the future. And as far as population, they may have the largest gold holdings when it comes to the population owning it, Joe.
Well, yeah, because everybody in India walks around with a Mr. T starter kit for sure. By the way, 12 straight years of monthly gold purchases from central banks. 800-951-0592. Final segment coming up. 800-951-0592. We got a line open. We'll get to you in the order that you called. I don't know where we're at on the round. So if we still have them left, $28.50, $570 a roll. If you buy 25 rolls, you can get it for $28, which 25 rolls, $14,000 at 800-951-0592. If you're new, it's so easy. Believe me when I tell you, you're never going to have a better experience. Just call the 800 number. Tell the girls, hey, I'd like the special. And we're going to ask you one real hard question. How many would you like? That's going to be it. Whether it's 1 roll, 5 rolls, 25 rolls, we're going to give you the price. We're going to give you the total. You can pick up in our office in Phoenix or our office in Colorado, or we ship it to you. If we need to ship it to you, we add a flat $35. That's it. You buy a case, it's $35. You buy a roll, it's $35. We ship FedEx. That's our primary way of shipping. If you bought a case of it, we may ship ground UPS, but primarily FedEx has been allowing us to be very competitive shipping. But that's how we normally ship things. When you order, we give you a trade number when you order. That locks you in. So if you need to mail a check, you don't have to worry about, I woke up tomorrow, silver's up another $1. You don't pay any more. You don't pay any less. Doesn't matter what silver or gold does. Once you get that trade number, we're both locked in. If you want to use a credit card, I split the cost with you. I charge you 2%. To put it on a credit card, and we take Visa, MasterCard, American Express, and Discover. It can't be any easier. Something else you need to know. We don't sell your information to anybody ever. Number 2, we don't make outbound phone calls. In other words, we don't have a boiler room in here and all these people just calling you week after week, month after month for the rest of your lives. We only call you when we let you know, hey, your product's in, you can come pick it up. Or, hey, you wanted us to call you to let you know we got your check. Other than that, we don't call our customers, Jason.
Yeah, and actually splitting that credit card cost. That's
and nobody else does that.
That's expensive when it comes to gold and silver. It's not like we have Walmart margins where we buy for $1 and sell for $2. That's not how it works for us. So by eating some of that credit card fee and you paying the other half of it, that's an extreme. That's something Joe doesn't point out as much. That's a huge deal for you on your side, because you start buying a lot of gold, Joe, it could stack up.
Yeah, absolutely. 800-951-0592, and just know we buy everything. So you buy it from us, sell it to us, because that's what a lot of people say. A lot of new people don't realize, because we don't talk about it as much. But absolutely, well, who do I sell it to? So call us up. We've been doing this for 26 years. We're not going anywhere. We're going to be here for you every step of the way. 800-951-0592. Gold's at $17.26, up $33 right now. Silver, $21.20 right now, up 61 cents. Jason, the Dow's up 700. Crude oil's up another $3 a barrel. Unleaded gas up another 6%. Unleaded gas up 12% in 2 days. By the way, that's about, just to give you an idea of what the 6% means, about 15 cents a gallon. So that's a pretty big jump 2 days in a row now. 800-951-0592.